Thank you, Miss Juliana Lopez, for that. I'm Nicole M. Santiago, and I will be reporting the next topics here. First is the XBRL, Reengineering Financial Reporting. Online reportings of financial data has become a competitive necessity for publicly traded organizations. Currently, most of these organizations upload their financial statements and other financial reports onto their websites as HTML or hypertext markup language documents. Various users can then access and download these documents, including regulatory bodies like the SEC, financial analysts, and other interested parties. However, the drawback is that information technology systems can't easily automate HTML reports. Manual data entry into their systems is necessary if one wants to analyze the data within these reports. However, a solution to these limitations is to use Extensible Business Reporting Language, or the XBRL, a standardized format specifically designed for business reporting and the exchange of information. The main purpose of XBRL is to simplify the publication, sharing, and processing of financial and business-related information. XBRL is also built upon another established internet standard called the XML, or the Extensible Markup Language. Let's talk about HTML first and why it does not apply to financial reporting. Hypertext Markup Language, commonly known as HTML, is a standard markup language used for creating and structuring content on the web. HTML is the foundation of most web pages and is used to define a web's document structure, layout, and elements. It provides a way to describe the content's organization and presentation, including text, images, links, forms, and more. While HTML is versatile for displaying text, images, links, and other media, it is not designed for specific financial reporting requirements because of these 8 aspects. First is the lack of structured data. HTML primarily focuses on visually appealing content, but needs the structured data elements required for financial reporting. Lack of standardization. HTML doesn't enforce a standardized financial data representation. This can lead to inconsistencies and difficulties in aggregating and comparing financial information across different organizations, periods, or industries. Limited data analytics. While HTML can present data, it doesn't provide built-in mechanisms for complex data analysis, calculations, and comparisons essential to financial reporting. Regulatory compliance. Many regulatory bodies require standardized and machine-readable formats like XBRL for financial reporting. Using HTML alone may not meet these regulatory requirements and could lead to non-compliance. Interoperability and automation. HTML is designed primarily for human consumption through web browsers. On the other hand, XBRL is specifically engineered to facilitate machine-to-machine communication, data processing automation, and seamless financial information exchange between different software systems. Accuracy and consistency. HTML does not enforce a strict tagging and validation process for data. XBRL, on the other hand, ensures accurate tagging, reducing errors, and promoting consistency in financial reporting. Data security. HTML-based documents may provide a different level of security and control over data access than more specialized financial reporting formats. And lastly, semantic meaning. HTML tags do not inherently convey specific semantic meaning related to financial concepts. In contrast, XBRL tags are standardized and carry well-defined financial semantics. For these reasons, organizations use XBRL as the preferred format for financial reporting. XBRL structured nature, standardized tags, and focus on financial semantics makes it better suited for accurate, standardized, and efficient communication of financial information. While HTML has its place in web content presentation, there are better choices for complex and structured financial reporting requirements. Now, let's discuss Extensible Business Reporting Language or XBRL, which I always compare with HTML. XBRL is a standardized markup language for exchanging and reporting business and financial information. It facilitates the electronic communication of financial data in a structured and machine-readable format, making it easier for organizations, regulators, analysts, and other stakeholders to access, analyze, and compare financial information. Its key features are structured data. XBRL enables the tagging of individual pieces of financial data with unique identifiers or tags that corresponds to specific financial concepts. This structured tagging allows for an accurate and consistent representation of financial information. Next is standardized taxonomies. XBRL taxonomies provide a predefined set of standardized tags representing different financial elements, such as balance sheet items, income statement line items, and more. These taxonomies ensure consistency in reporting across industries and organizations. Next is flexibility. XBRL is extensible, meaning organizations can create custom tags to represent concepts specific to the reporting needs, while still adhering to the overall XBRL framework. Machine readable. XBRL data can be read and processed by software applications, automating data collection, analysis, and reporting processes. Data validation. XBRL validation ensures that the data is accurately tagged and conforms to the specified taxonomy, reducing errors and improving data quality. Interoperability. XBRL facilitates data exchange between different systems, organizations, and jurisdictions, improving transparency and efficiency in financial reporting. Regulatory compliance. Many regulatory bodies worldwide mandate using XBRL for financial reporting, ensuring consistent and standardized data submissions. Data analysis and comparison. XBRL enables efficient data analysis, comparison, and trend identification, as the structured format makes it easier to aggregate and analyze information. Investor communication. XBRL enhances the transparency and accessibility of financial information for investors, analysts, and other stakeholders. And lastly, global adoption. XBRL is widely adopted internationally for financial reporting, and it continues to gain traction as regulatory bodies and organizations recognize its benefits. Next is the XML, Extensible Markup Language, a widely used markup language that allows users to define rules for encoding documents in a human-readable and machine-readable format. It serves various functions and uses across different domains due to its versatility in structuring and representing data. It has a lot of uses due to its versatility, but overall, XML serves as a foundational technology that addresses various data representations and communication needs. Its flexibility, human readability, and structured nature make it a powerful tool for structuring information across domains, industries, and applications. XBRL is built upon XML or Extensible Markup Language and are both markup languages, but they serve distinct purposes and have specific applications within different contexts. In purpose and domain, XML is used for various purposes beyond financial reporting, such as document representation, data interchange between applications, configuration files, and more. While XBRL is a specialized language focused on electronic business and financial data communication. It uses XML structures to define standardized tags representing financial concepts, making exchange and analyzing financial information easier. In standardization, XML itself doesn't enforce specific standards or rules for data representation. It's a flexible framework for defining markup languages, while XBRL defines a set of standardized tags and conventions tailored for financial reporting. These tags have specific meanings within the context of financial statements, making XBRL data more standardized and consistent. In semantic meaning, XML tags and structures don't inherently carry specific semantic meanings, while XBRL tags have a predefined semantic meanings related to financial concepts like balance sheets, income statements, and other accounting elements. This enforces a standardized interpretation of data. In use cases, XML can be used in various applications, including data storage, data exchange between systems, configuration files, web services, and more. XBRL is primarily used for financial reporting, regulatory compliance, and analysis. It is tailored to the needs of the financial industry. Lastly, in implementation, XML can be used as a generic framework for structuring data, and the creator of the XML schema defines the structure, while the XBRL follows a specific set of schema, definitions, and taxonomies that dictates how financial concepts should be tagged and structured. In summary, while XBRL is based on XML and shares some similarities regarding using markup language principles, it serves as a distinct purpose. It has a specialized focus on structured representation of financial data. XBRL's predefined tags and semantics make it a powerful tool for standardized financial reportings and analysis. In contrast, XML is a more general-purpose markup language used for various data representations and interchange tasks. Overview of the XBRL reporting process. Let's break down the XBRL reporting process step by step using the provided diagram and components. First, under the Information Reporting Organization, they must submit financial or business data in XBRL format. This could be a company, organization, or regulatory body responsible for preparing and sharing financial reports. And in the first step is the XBRL taxonomy. The XBRL taxonomy is a standardized collection of definitions and tags representing specific financial concepts. It provides a structured framework for tagging financial data points. Next is the taxonomy mapper. A taxonomy mapper is a tool or software that helps the reporting organization map the financial data from its internal database to the appropriate XBRL tags in the chosen taxonomy. And the reporting organization's financial database. This is the repository of the reporting organization's financial data, which includes information like balance sheets, income statements, and other relevant data points. The fourth is the reporting organization's financial database with embedded tags. Using the taxonomy mapper, the financial data from the organization's database is tagged with XBRL tags based on the chosen XBRL taxonomy. This creates a dataset where each financial data point is associated with its corresponding XBRL tag. Next is the XBRL instance document financial report. The tag financial data is compiled into an XBRL instance document. This document is an XML file that follows the structure defined by the selected XBRL taxonomy. It includes the tag data points and their relationships. And the next is the reporting organization's website. The reporting organization website is a platform for making the XBRL-based financial reports available to various stakeholders such as investors, analysts, and regulatory bodies. Then in the information using organization, which refers to individuals, entities, or systems that access and utilize the XBRL-based financial reports for analysis, decision-making, and other purposes. The Download Financial Report to User Systems is an information using organization that downloads the XBRL-based financial report from the reporting organization's website onto its system for further analysis. And Analyze Financial Information. The information using organization analyzes the downloaded XBRL-based financial report to gain insights, perform comparisons, conduct financial modeling, and make informed decisions based on the financial data. Overall, the XBRL reporting process involves the preparing of financial data in an XBRL instance document by tagging a specified XBRL taxonomy. This document is then available on the reporting organization's websites for stakeholders to download and analyze. Using standardized XBRL tags enhances the accuracy, comparability, and efficiency of sharing and analyzing financial information. My last topic is the current state of XBRL reporting. Recent progress towards that end has been substantial in the United States and internationally. Some of these developments are summarized here. First is the U.S. banking regulators and call reports. Since October 2005, U.S. banking regulators have mandated that banks file quarterly call reports in XBRL format. This requirement applies to over 8,000 banks in the United States. Call reports contain detailed financial information about a bank's operation and conditions, and using XBRL streamlines the reporting process and enhances the data accuracy. Second is SEC Voluntary Financial Reporting Program. The U.S. Securities and Exchange Commission, or SEC, introduced a voluntary financial reporting program in April 2005. This program allows companies to use XBRL as an exhibit to supplement their regular financial filings, providing additional transparency and detail. The next is SEC's Interactive Data Electronic Application, or the IDEA. In September 2006, the SEC launched a new electronic reporting system named IDEA to receive XBRL filings. IDEA is designed to enhance the accessibility and usability of financial data submitted by companies. The next is SEC's mandatory XBRL adoption. In May 2008, the SEC issued rules that mandated large publicly held companies to adopt XBRL for their financial reporting by December 15. This requirement aimed to improve the accuracy and accessibility of financial information. Next is the international adoption of XBRL. Internationally, similar trends were observed. The Tokyo Stock Exchange in Japan started accepting XBRL information for reporting purposes in early 2003. In Canada, the Canadian Securities Administrators, or CSA, launched a voluntary program in 2007 to help companies gain practical experience in preparing, filing, and using XBRL information. Regulatory bodies like China, Spain, the Netherlands, and the United Kingdom have begun requiring certain companies to use XBRL for their financial reporting. The last is XBRL and Sarbanes-Oxley, or AC, or SOX. XBRL is seen as a means to facilitate compliance with legal requirements outlined in the Sarbanes-Oxley Act. This legislation was enacted in response to filing, reporting accuracy, and accountability concerns. XBRL can contribute to the timely reporting of financial statements as mandated by the Sarbanes-Oxley Act. In summary, the current state of XBRL reporting involves in widespread adoption in the financial sector, both in the United States and internationally. Regulatory bodies, stock exchanges, and companies have recognized the benefits of using XBRL for efficient, accurate, and transparent financial reporting. The use of XBRL also aligns with regulatory compliance efforts, such as the Sarbanes-Oxley Act. It enhances the quality and accessibility of financial data for investors, regulators, and other stakeholders. And that's all for XBRL Reengineering Financial Reporting. Again, I'm Nicole, I'm Santiago, and thank you for listening.